What's up, you guys? All right, well, finishing the week here with a red day, red Friday. That's never how I like to finish the week, but it's just what it is today. So red on XPEV, red on NTNX, red on CLEU, green on VVPR, green on MDGS. So red on 3, green on 2, 5 stocks I traded, down 9,000 plus a little bit, under 10,000, but kind of right at that mark. I'm still trying to set 10,000 as my max loss mentally on the day, and per trade at about 5,000. I had 2 $5,000 losers and 2 $3,000 losers, and then I also had a $7,500 winner. So anyways, it all kind of, balances out, I guess, but at the end of the day here, negative. Green on the week by about 40,000, but red on the day. So, a little disappointed there. As I'm thinking about going into September, August is traditionally a slow time of the year, and things start to usually pick back up going into the fall. So September, and then October, November, and December, progressively getting better, usually peaking at my historical best months of the year, November, December, January, February, and then sometimes cooling off going into the sort of late spring and early summer. This year has been different. This year increased in April into May, peaking in June, a little bit less in July, a little bit less here in August, and so maybe it'll dip down again in September, or maybe September will be sort of the bottom of this pullback before going into a strong fall. Or I don't know. Again, it's hard to say. It's speculating, but that's kind of as I look at the trends, both on an intraday level. The last few days have been choppy, but then also on a sort of monthly level, and then even just on a yearly level. This year's been so different from any other year that I've ever traded in. I mean, it feels like my whole trading career kind of has led up to this small little window in time where we've had absolutely incredible opportunities unlike anything I'd ever seen before. Maybe like traders who were trading in the early 90s and then all of a sudden had this, dot-com bubble surge that created a huge opportunity. My hope, though, isn't that it's just a small window of time. My hope is that this continues. I mean, obviously, that would be amazing, but we'll see what happens. Just have to ride the waves of the market, be there for the momentum, and this week it was a little slower, a little fewer and further between finding those big momentum stocks, but we got a couple. And so going into next week and as we start the new month, I've just got to be a little bit more conservative, stick with kind of what's really within the core of my strategy for day trading. Because this week I had, a couple unnecessary losses on Netflix and a couple other large cap stocks, which although I had the profit cushion to afford to take those risks, next week going into the month of September, I'm not going to have that profit cushion. So back to basics, focusing on what I know works the best, both for day trading and swing trading. From the swing trading perspective today, I've got 2 swing trades, both on Amazon and Apple, that I'm looking at realizing basically 100% of the profit potential on them for the credit call spreads. Actually, Apple's a credit call spread and Amazon is a credit put spread, but looking at realizing max profit on both of those. Those trades I've been holding for several days, and it'll be like $600-700. So it's not a lot, but if I can keep doing that each week, then that swing trade account keeps growing, kind of in nice, steady increments. While on the day trade side of things, I'm a little bit more aggressive, trying to get those big winners, but also sometimes having those big losses. So going into next month, gotta stay focused on both the sort of best quality swing trades and best quality day trades, at least until I have a profit cushion to afford to take a little bit more risk. All right, so again, questions, comments, leave them down below. You want to give me some feedback or some thoughts on this month from your own trading or from what you've seen in the market with me, I'd love to see it and hear it, and I'll see you guys first thing on Monday morning for the last official day of August. All right, see you guys there. All right, you guys, so we're going to do midday market recap, finishing the week with a red day, down 9,000. Red on 3 stocks, green on 2, losses, in the range of 5,000 on the losers, winner 7,500 on the winner, MDGS basically break even. So kind of a, tough day, tough finish to the week. NTNX is the last one I was just trading, and I actually went short on it, like right in this candle here, thinking that it was going to break down here and come back down towards the volume weighted average price. So I was looking at this as like first, second, third pullback. Usually the fourth one fails, but it has been strong. So I was short and it popped up and I covered the loss minus 2,000 and then flipped long for the break over this level right here of 14, which ended up being okay. It went up to 43, but it didn't sell. I was waiting for the break over the $0.50 to take some profit, and it didn't break that level, and then it came back down here, and on this candle I stopped out. So now on the 5-minute you've got this red false breakout candle where it faked me out to the short side and then faked me out to the long side. So got caught in the chop on NTNX. CLEU, this was one that I was red on as well. I bought on this pullback right here and stopped out as it broke the volume weighted average price. XPEV, I took a trade on this pre-market for the bounce off, where was this? No, sorry, this was for the break through first 5-minute candle to make a new high. And then I added off of 24. So my entry was right here, then added off of 24 and was down $5,000 at the open. Made back that loss on VVPR buying the first 1-minute pullback, and that so far was the cleanest trade today, this first 1-minute pullback right there. I actually added at 6 and then was adding on this move higher. So that one was a nice one, but unfortunately, it wasn't enough to really make up for all the chop today. So at my best, I was up 2,600, and now at my worst, I'm down 9,000. And for me, it's I'm at a point where on the day, it's not really worth. It's a Friday, it's 11 a.m. The writing is on the wall that, that last attempt on NTNX was a little bit of a stretch. I was down $3,000 and trying to get myself back to maybe break even. Was it an A quality setup? No. Was it volatile? Yeah. Did it provide some opportunity? Yeah. But again, when you're trading subpar setups, you have to expect choppiness. And I got chopped out short and then long. And even right now, if I flipped short again right there, bounces right back to 28. So, this is a little outside my go-to, and I don't know. I mean, again, can always be critical of yourself and say, I should have done this, I shouldn't, this and that. Sometimes you'll go outside your go-to and you'll end up having a great day. So, over the long term, I think you do have to look at that and say if you can have the discipline to track all of your trades, then you could say over a long period of time, how does going outside my go-to generally work out? Is it generally hurting me? Is it generally helping me? And unfortunately, that requires a level of taking notes on every trade you take much more than I'm currently doing. So I can't really say with certainty at this moment whether or not branching outside of my go-to is in the sort of big picture helping more than it's hurting. But what I guess I could say is that I think the more you trade outside your comfort zone, as long as you have a profit cushion to afford it, the more diverse you'll be in your trading strategy. So sometimes, trades like on a stock like this, even though I could have, done without that $6,000 loss, on the other hand, venturing a little outside my go-to strategy and taking some of these trades over the course of months and years will make me more comfortable trading these types of stocks. And eventually, presumably, I'll be net positive as a result of venturing outside the go-to. But, of course, it's tricky, and If you're at a place where you don't feel like you can afford to venture out, then that's where you have to just stick with what you know works. And so anytime I've had a period of difficult trading, for whatever reason, whether it's false breakouts or just a bad month, that's when I've said, all right, I've got to go back to basics. I have to focus on what I know works. I can't afford to, sort of dabble in some of these other areas that are just a little bit more iffy as to whether or not I'll really be consistently profitable. And everyone has their own strategy, which I think is obviously important. So the question of would I be willing to trade more like this person or more like that person, it's the strategy that is kind of a reflection of your personality. Being willing to trade grinding stocks like this, where you're sort of in a positioning yourself just for a longer term hold and you're not really looking at the 1 minute chart or whatever the case is, it's just a different strategy. I mean, if I did that, I wouldn't be comfortable holding the same share size that I would hold using a 1 minute setup, right? On a 1 minute setup, I might be comfortable holding 10,000 or 20,000 shares because I'm staring at it, I'm watching it, I'm very dialed in. But if I was going to trade on, a longer time frame and plan to really just sit and let it work, I'm not going to put 15,000 shares just out there. I'd have to trade with smaller size. The problem with scaling down and trading with smaller size is that naturally your profits are going to be smaller, right? So there's a sacrifice to that. Now, on a stock like this may be one of those stocks that trading it on the 1 minute chart is going to result in net losses, whereas trading it on the 5 minute chart, even with smaller size, would result in net profits, just because the 1 minute's choppy, the 5 minutes a little cleaner. Sometimes that is the case, and you look at it and feel like, oh boy, I would have done better had I just sat and held this. To the short side, I went red and then would have been back to green. To the long side, I went red and then would have been back to green right on that pop, and now I'm back to red. So that's always a little tricky. But so this is where I'm sitting right now on the month. This is, so let's just go for August here. So this is the month of August. This is the fifth red day of the month for me, which is kind of discouraging, I guess. But we've got one more day on Monday to finish up the month. So hopefully I can have a green day on Monday. Mondays usually are pretty good. I had one red day here on Monday, but usually Mondays are pretty good. So hopefully I can have a green day on Monday. And as I sit right now, I'm at 474 before today. So today's going to drop me back down to 464 in gross profit. Average daily gain 25,000. So again, to have a $10,000 red day or a $16,000 red day, those are okay as far as keeping within the range of not giving back more than 1 day of profit. So I could easily make back, today's $10,000 loss, yesterday's $10,000 winner, minus 16, 46. You see it, my average this week is 46, 56, 66, back down to 50, to up, down 40. So I'm up $40,000 on the week. In fact, this week I would have done better if I had just stopped on Monday, but you never know that. There's no way to know that, and so we show up every single day to keep trading and waiting for those opportunities. And this week has just been, I would actually say that it's been a little slower since, I guess, maybe the 11th here. These last 3 weeks, was when I started to have a couple red days, kind of start churning water through this area. So through this week, I was kind of like flat. Red, green, red, back to break even of those 2 days. Red, back to break even by this day. Green, and then a drop down. Green, another drop down here. So, I'd have to get back tomorrow or on Monday. I guess I would have to make back, let's see, I was minus 6. I'd have to make back like $15,000 to close back at my high of month. But that doesn't really make a huge difference. That's just the calendar. So yeah, it's been an interesting month. A good start, but then started to get a little choppy and slow down a little bit in the last couple weeks. August and September are typically my slower months of the year. but this is the best August I've ever had in my entire career. Almost $500,000 in profit, gross profit. It's a amazing month. In fact, in this month right here, I actually made more than I made trading in an entire year. I mean, this is like a yearly profit right here. And to do it in 1 month is amazing. It is, I would say, a little discouraging that this month my profit loss ratio has gone down. I've had a couple of bigger losers. I think as a result of a really strong month in June and a strong month in July, I was swinging for some, kind of home run big trades, even though usually that's not a good thing to do. I definitely did it a bit this month. And, going into September, it's a new month. And so I've got to start with trying to build my cushion first on the month and see if I can get myself a little bit in the green. But because this is going to be kind of a continuation of this, as it is right now, go to overview calendar. The last few weeks have been choppy. So I'm going into September coming off a little bit of a choppy streak here. This is a time to try to be more disciplined. In this area, I think I could afford to be a little bit, a little bit more, trading outside my wheelhouse because I still had such a big profit on the month from up here. But now as I go into September, that's different. I'm going into a month and I have to be a little more conservative as I get the month started. I can't afford to be trading large caps probably the way I have this month, not until I first have a cushion. Now, ultimately, I'd like to get better at trading all different types of stocks. That's only going to make me a better trader. I think we would all feel that way. But you got to pay your bills first. Make sure you build that cushion. Herbalife today, there was a great bounce off the 200 moving average right here. I mean, this was picture perfect. I had the order ready to go at $44, and I said, you know what? The risk is too high. The risk is just too high. And, I think it was high risk, but I definitely had the right idea on that one. I didn't trade it. NTNX kind of had the wrong idea on. The risk was lower, but I still lost $6,000 on it. The thing with Herbalife is that because the move was related to news, I was worried that it could get halted, and then the risk would be all the money I have in the trade, I'm stuck. So that risk would have been substantially more. But anyway, so I think going into the weekend, I never like to have a red day on a Friday. It always leaves me feeling a little like, oh man, that sucks. I'm going to think about it over the weekend. Dug myself a little bit of a hole here. I wasn't even fully out of the hole from Wednesday. I lost $16,000 on Wednesday, made $10,000 yesterday, down, almost $10,000 today. So yeah, that's annoying, but it's part of the deal. And I think if you think about this in like a competitive sports kind of way, you never like to lose a match, whatever your game, whatever you're thinking about, tennis, ping pong, baseball, basketball, football, whatever. You never like to have a loss, but it's almost impossible to have, a straight season of wins. And even in tennis, if you had a straight season of wins within matches, you're still going to have individual games that you lose. I mean, that's just to be expected. And so what drives us to come back after having a loss? Does it feel kind of bad to have a loss, to have a red day, to lose a couple games, to lose a couple sets? Sure. But then there's that excitement and drive of being sort of, the underdog and trying to make it back. And again, not to revenge trade, but to try to get back into the driver's seat, because that feeling of the recovery and then back in the driver's seat is such a gratifying feeling. It's like, yes, I did this. Now I'm back in the driver's seat of the day or the week or the month or whatever it is. So even from just one small red day, the feeling of kind of a little bit of discouragement, but then on the other hand, okay, I'm going to regroup, I'm going to get this back together, and tomorrow, this is what I'm going to do. So, the challenge today was that we didn't have a great gap scanner. Our leading gapper was NSYS, and that was a fail. It gapped and faded. MDGS was our second or third leading gapper. This is the one that I traded, but I only made $600 on it. I didn't make that much. And then XPEV was further down the list. It's a recent IPO stock. It was a higher risk trade, and I don't know, you know, I kind of knew it was higher risk, but went for it anyways, and then boom, $5,000. You know, then the next one, CLEU, that was on the scanners, but lighter volume. I didn't get in it down here. I just missed it. And then I kind of, you know, I bought it. I ended up buying it high. And when it flushed down there, I got a good size loss. And then NTNX, I was kind of, I guess, grasping at straws, hoping to catch something maybe fading, since it felt like it was top heavy up here, but I was wrong on that, and then I was wrong on my long. So sometimes I've talked about the risk of flip-flopping, you know, going from long to short in one move. I think that this is one of the times where that was a fine setup to do that right here. I mean, obviously it would have been better to be long exactly at the price I was short, but I think it was okay to flip-flop for the first candle to make a new high. It just, as it turns out, was a false breakout. So it was a false breakdown, which sometimes results in a short squeeze as it, you know, surges up. Short sellers, like in this case me, cover into the breakout, and so I flipped long, and we did get, you know, 20 cents there from my average of 28.18 up to 28.43, but I didn't take the profit off the table because I was looking for that to be the beginning of a 5-minute setup, and I thought on the first 1-minute pullback it would get bought up, and then I stopped out here when it flushed down. So couldn't get that one timed right. It is what it is. So I'll be back at it first thing tomorrow, or first thing on Monday, hopefully with a better start to the week than I'm finishing this week here. On my options trades, so these trades on Apple, selling the 555 or 550 calls, those are worthless. They're going to expire worthless. So I'm in good shape on those. Apple, as we know, we've got reverse splits or traditional stock splits coming up on Tesla and Apple. So I'm going to wait to see how what the options market looks like on the sort of, you know, when the new price is in. But these should expire worthless today. And I could cover them right here for a debit of like 1 cent. But remember that I'm going to pay a commission on that. So the commission is, you know, 13 bucks, which is really stupid that it's that high. I should call them. But anyway, in any case, you know, I'm going to pay the commission on that. So I'd rather just let that expire worthless, try to keep every penny I can. And same with this, it's at 35 cents by 28 cents. These are the 3,200 Amazon puts, and Amazon right now is well above that level. So those should expire worthless by the end of the day, and I'll keep that $500-600 in my pocket. So nice weekly swing trade there on those options trades. I'm not going to add anything today. I was trying to add Netflix, the 580 strike call spread, but I couldn't get filled on it, and I'm going to wait. So I'll see how things look on Monday morning. All right, so I hope you guys have a great weekend, and I'll be back at it first thing on Monday morning.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up and let YouTube know that this channel is the channel to watch if you want to learn about day trading.